Good morning, everybody.
Good morning.
Good morning, good evening, wherever you are. I'm Axis Alive, and I am joined here for our Sunday morning CHIPPENDALES TA session with the one and only Ryan Patrick Hefner.
What's going on, man? You sticking with the name, huh?
Oh, yeah. Somebody came into a Twitter profile one day, the last time we did this, and was like, "Oh, hey, I feel like I was listening to, or I was looking at a Chippendales TA session," so I just kind of ran with it.
Dude, I saw that, man. I thought that was funny too. And hey, I just got an email because I put a reminder in. The Hex Rewind just premiered from Hex Cadet, the 2022. So I can't wait to watch that.
I saw it. I think it's pretty dope, man.
Oh, you saw it already? It just
I
came out
think.
just now.
Oh, just now? Are you sure? I saw
Yeah.
I saw a modified version. Maybe it was a different version that like 2 days ago, but it could be a different one. He
Oh
might have
no,
just
that wasn't the
uploaded it.
full one. Yeah.
Okay, okay. So people have been chopping and hashing up his hex rewind from last year over and over, and
Yeah.
like they just keep getting better and better.
Yeah, he's premiering it right now live.
Okay, cool. Well, shoot. I wish I was. I wish I would have known that. We could have freaking put him on the front stage. It's all good. All right. Well, we're going to go through a deep dive on Hex today, mainly, and go into some of the deeper data on it outside of just price, but also we're going to dig into the price because obviously that's kind of going through some interesting phases right now. It's starting to, actually, I got evidence that it's decorrelating away from the market. So I'm going to pull up my screen here and, I kind of wanted to just wait for some people to roll in, but some interesting topic here. We have, let's see. Custodia Bank denied Federal Reserve System membership. So what this means is this lady, Caitlin Long, used to work for the New York Stock Exchange for many years as like a head figure. I think she was a CFO or CEO. And effectively what she did was she left the industry in favor of cryptocurrency and particularly Bitcoin because she saw all of the problems going on with the rehypothecation of assets where effectively what they're doing on the highest levels of finance is they're creating endless leverage, meaning printing money out of thin air by creating new tradable contracts, new interest-bearing assets, new different kinds of tools and techniques, and from the higher levels of finance to basically get away from backing their assets one to one with real world assets. So what that does is it creates this like smoke and mirrors effect where you can see these huge valuations in like your stock or your pretty much any asset, like even in the real estate market. That's what inflation effectively is when the valuations no longer are true to economic growth and they start becoming inflated based on falsified data effectively. So she didn't like what was going on, and so she decided that she was going to leave that industry and go into Bitcoin because Bitcoin was like limited in amount, only going to ever be 21 million. Was the inflation rate was predictable over time, and so because of these factors, she felt like the whole world should try to adopt this as a store of value. Anyways, fast forward a few years past the 2017 bull market, and she created a bank out of Wyoming that's got, they're kind of crypto friendly, and she's actually led a lot of the legislation on that front in anticipation of launching this bank. Well, they signed up to try to get a charter to become a member of the Federal Reserve System as a master to get a master account effectively, and they were just recently denied that. And so my speculation on this, and this is something that we can discuss, I guess, Ryan, is they they say that the Custodia's risk management framework was insufficient to address concerns regarding the heightened risks associated with its proposed crypto activities, including its ability to mitigate money laundering and terrorism financing risks. Now, that's actually just kind of like an outright lie. That's just to me. So what's effectively happening is here is what Custodia wanted to do was say if you deposit a cryptocurrency asset. Well, first of all, they're gonna have to KYC anyways. They were cool with the KYC, AML, and all that stuff. They were gonna do that anyways. So they would have all of their user account information. And so the reason why this doesn't make sense is because if you have all of your user account information and you see funds come into the exchange, well, that'd be a choke point by which when they become a member of the Federal Reserve System, that they would be regulated and they would be able to stop money laundering because like they would be able to track the on-chain transactions from known problem wallets and then blacklist them or not allow the transaction to occur. And so it doesn't make sense that that is a good enough excuse to block this. So what I think is actually happening here is the Fed is gravely terrified of a system where assets have to be backed one to one with a counter asset. So if you so that all of what's on the reserves is backed. And so for example, you wouldn't be able to take leverage out, like you wouldn't be able to deposit your Bitcoin to the bank and take leverage out on it. It would stay in the bank and it would be sold at market price, and then the bank would have to hold those funds at that price. And so effectively like everything would be in the reserve. And so what I think is going on here is that the Fed is terrified of the breakdown that would happen when the economy realized that as the next bull run occurs and as cryptocurrency increases in uh, general population awareness of it, like people would go to the asset that's not only increasing the most, but it becomes the most stable in the form of having reserves behind it, kind of in the way that gold and other things are. And I mean, people can make the argument that those markets are also manipulated in their own way. But the point here is that this would be a choke point, just like any other big, large exchange without the leverage taking on. And so it doesn't. There's something that's not adding up here, whereas why their membership was detracted.
Where does it say it was detracted? I just see that they're still waiting.
Just that their so
Oh,
their application for master account is still pending, but that they were denied. Let's see here. Um, It said, okay, so the Fed advised Custodia 72 hours ago, and this was a few days ago, that it could either withdraw its membership application or see it denied,
got
and
it.
the Fed denied it immediately. So they're still their application for master account is still pending, but it was denied on the on some front um, to become a member bank. So it's not that they've totally lost the case, but the problem is that with the central bank having so much control over the economy, they could basically deny this and push it off and make it pending indefinitely, which would limit users' ability to easily onboard an off ramp into cryptocurrency. And so I see this as the next great innovation in cryptocurrency and how it applies to Hex is the biggest problem with Hex right now is that people just don't know how to get in, or like their general people might know that Hex exists, but then they know nothing else about it. And so like even if somebody wants to get exposure to Hex or wants to get exposure to cryptocurrency that's true DeFi, they have to know what a MetaMask wallet is. They have to know how to send and receive an Ethereum transaction. They have to know the nomenclature for what an address looks like. They have to know about all the different scam risks when you are dealing on the blockchain. And so because all these things are basically, effectively firewalls that's preventing people from adopting these tools and technologies, it's what's slowing down innovation and progress in the space. And so it really begs the question of who's on whose side, and because you have certain Congress people that are fully understand that DeFi is the future, and then you have other people in the highest levels of government that just disagree, and they don't want to see that, they see it as a threat to the existing system. And in all honesty, it is a threat to the existing system insofar as those who hold that asset which inflates the highest, aka the dollar, and is closest to the money printer, aka the dollar and the credit system formed around it, that they would be most adversely affected by the on ramping and onboarding of true sovereign DeFi cryptos. Um, and then there's another layer to it too, which is that counter argument, which would be that like these huge drawdowns we see on Hex price, for example, they if you were fully in sovereign crypto and the Hex price drops 96% on you and you can only afford 5% of what you used to be able to afford at the top because everyone's trading in Hex, for example. Well, that's not a very stable system either. So I think ultimately everyone's, kind of tossing and turning over the rule sets that's going to be enacted here and at what rate we can safely onboard the world into crypto. So the way I see this going is banks like this, they need to adopt safety measures and have regulation and things, but the choke point here for me is when your bank app, like your Chase banking app or when your Bank of America USAA app when they allow you to purchase crypto directly with your checking account, that is going to be the wall that breaks down that allows the masses to enter crypto in an easy and efficient way. And similarly, how like Cash App has purchases of crypto and other things. Any comments on that?
That's a tough one, man, because they're trying to be like a breakout example of how to start giving people more trusted ways, we'll say, than even exchange, right? Because think about where trust and confidence is with exchanges. And the Fed knows all this, right? And they have their own narrative. They want to bring out their own CBDCs. They want to roll out a digitized system, right, of assets, whether it be coins or assets to or deeds to a house or whatever. They want to do it on their terms. They don't typically want to have like something like a bank that is widely accepted as a trusted source of transactions to be the first ones to do that, is my take. They want to be the first ones to do it. And so as something as delicate as a bank versus like an exchange where it's pretty understood and accepted that, exchanges have problems. I mean, they've had them for a long time. There's nothing new there, right? Whether it be TD Ameritrade, whether it be, whatever, Robinhood, you name it, right? They've had problems for many years. So I think this is probably just a really delicate situation where you have a bank wanting to trailblaze a new path for people to hold currencies like crypto inside of it. And I think there's going to be a lot of lobbying. I think there's going to be a lot of BS that's going to go into how that gradually takes hold. And as me and you were talking offline before we went live, I think the prices are going to move up first. And then the narrative that is going on that makes sense is going to get attached to that price increase. Because we're seeing Hex's price increase right now, right? On no narrative. There's nothing.
Yeah.
It's on total FUD. It's on the SEC. It's on Pulse Chain being delayed. It's on big whales dumping.
There's no fundamental news coming in that should make for bullish price action.
So you see a situation where Hex goes up to, you see a situation where Hex goes up to 4 to 5 cents, then you'll see a narrative that get attached to that. Notice like that's the order of operations that'll probably happen here. And then looking back, you'll say, oh, okay, the bottom's in.
Yeah.
It's never that easy where it's just like, boom, something comes out. Oh my God, the biggest crypto news comes out, bottom's in and everything takes off. Like, no, it's never that. It's like, if you didn't catch
the bottom
Bitcoin,
is always set before the sentiment changes, because
and
somebody has to
set the bottom.
That's an important
distinction to make. That's a very important distinction to make because we don't know what that narrative shift is going to be, or the news cycle is going to be, or the legislation is going to be. We just don't have enough insight to know. But what we can go off of, as always, is 85 to 95% correction downsides.
Yes.
And how much better of a price you're going to get, literally,
100%.
Hex isn't at 20 cents anymore.
Yeah, dude, 100%. I'll back that up fully that, likely the bottom is set for Hex. We're just actually piercing right. This is the 4-hour chart. The price is now piercing a 500-day downtrend resistance. And this was marked by basically a quadruple bottom on this fat wick. So these wicks back here on the 4-hour chart, they were 15% wicks. This was sharks and dolphins capitulating into weakness. And yet somebody was a buyer here. And I think I saw a public tweet by Hex Toys that said publicly that they were a buyer in this range. And Hex Toys has been here since day one and been a large player in the space. They've made watches. They've been in Hex long enough. They're probably close to Richard. So when that public tweet came out, to me, it marked the bottom and these wicks. So you get like a one tap for 15%, and then you get a couple 11% taps here. And so basically 1, 2, 3, 4, and then you set the bottom. You try to get the rejection down off this resistance line here. Couldn't do it. Bounced right back up. Started to create organic demand here. Get these little buyers come in. Organic demand, and then the big whale move. And to me, the fact that this trend is held now for 1, 2, 3, 4, 5, 6, 7, and now it's that it's bouncing off of this moving average, to me says that the trend is reversed. And so if we push this out to a daily time frame on Hex, you're going to be able to see how clearly how we're just starting to pierce that 500-day downtrend resistance. So let's see here. Goes all the way back to the top. You had a failed breakout here on the Pulse X SAC phase. You had a failed breakout here on a rumored Pulse Chain launch. So right now we're pumping on, whoops, that's screwing up. Now we're pumping on no news, which is way more bullish than any of the stuff going on way back at the rumored Pulse Chain sacrifice phase. So to me, when I look at this huge downtrend and I see that we're basically breaking that level now. So long as we don't break too far down past the previous low, like there's nothing saying that X can't go on a rip now and then come back down and test some of these lower Fibonacci levels. You can see here that I got a Fibonacci lined up from that recovery top here at like was at 7.5 cents. And then you had the God whale pump into it here in October around the Hedron um, pump. It was like the Hedron auction launch in November. So this preceded that. And then you had a complete inversion almost immediately. Like you're not seeing that again. And when you did try to see that kind of behavior again here, there was about 150 million hex dump in a couple cells, and the price just shot right back up. There's not enough firepower in the negative people's wallets to keep us down anymore. And so now that those people are out, the sharks are out, like they're basically left with one option. They can buy back higher. So all they can do now is effectively help the price get up by injecting liquidity back into the ecosystem.
I think that's a good segue to get into that, what the future end stakes and just liquidity is looking like.
Sure. So like, well, first we'll go into the liquidity. Here you can see the TVL locked in the hex liquidity pools. So what I'm going to point out to you here is that we're basically at the same level we were at here. Basically, let's see, we got $11 million in the pools, but only $3 million that is USDC. And here we had like 6-7 million, and that was back in September of 2021. So we look at the hex price chart and go back to September of 2021. I think the price was just like around 20 cents ish. Yeah, so it was like right before the big pop up, like you were between 18 and 23 cents effectively. So wait, let's just say an average it was 23 cents on during that liquidity time frame. And then we saw about $500 million get traded in like 21 days in and out of the asset. So that was the big blow off top that we had, was about a $500 million traded in less than a month. And then that was what marked the top. Now keep in mind, all of this price action that happened above basically this level here was pulse chain hype. So really, when you figure that, you're really not down that far. You're only down 68% off what was, effectively a total hype cycle, straight up. And so the liquidity here, when you look at this, you can see that we're at basically those same levels. There's about the same amount of USDC, meaning the same amount of money coming into the ecosystem would pump the price the same amount or higher. Granted that there was the same amount of sell pressure or less. And just the fact that so many people have capitulated along this downtrend here, to me, means there's going to be a lot more bids and pressure coming in than sells. And that's kind of been proven because if you look at the right side of this data set here, these buys have outnumbered these sells now for weeks. I've seen this get as high as like 300 to 100 or like 400 to 200 or 700 to 250 or 280. Like,
yeah,
the amount of like small fish accumulating versus big fish selling, there's less and less big fish that with less and less powdered hex to sell. And there's more and more buyers coming in with more and more DCA money coming in, big or small. And so now like the scales are getting so imbalanced in the favor of the bids, and now this is all organic demand coming on an on-chain traded asset that has to be swapped from a stable coin, which is actual liquidity. It's not fluff money, like it's not leveraged money, it's not anything like that. It's all real liquidity that has to come from the chain that's backed by real dollar value. And so this to me is all lining up for a big flippening. And so people say, well, one things that we should look for, and Ryan, you said this earlier today, was like we should look for a decorrelation event in Hex versus Bitcoin and ETH. And just to give you guys a quick little segue on what Bitcoin's doing at this current time, it's actually going up right now. So we had this basically the short squeeze. There was like 9-to-1 shorts to longs, meaning the market was so imbalanced and bearish that there was 9 sellers to every buyer as far as on the leverage exchanges, which causes giant short squeeze, which now this is momentum that can continue. And you can see here that Bitcoin's in a solid uptrend, negating the wicks here on the daily time frame, and it's just shooting up on a weekend, and weekends are supposed to be weak for crypto. So this is marking the bottom for crypto, and I think we're in for like a year to year and a half of crazy sideways volatility on crypto. But like, know that if you did not catch the bottom here, you may get another chance later on, but also that you may not either, because the bottom could be set. So going back to Hex, I'm going to pull up this liquidity chart again and show you just exactly how powerful this is, because the reason why Hex has been so slow to move is because it's literally, the sentiment has to flip slowly because it's real on-chain trading. People are trading their actual stable coins for this stuff. It's not just, leveraged money on somebody else's pocketbook, effectively, like it is on like the big exchanges. And so if you look at the 1-year correlations matrix, if you don't know how to read this, this is Bitcoin, ETH, and Hex on the left. And then on the top, you got Bitcoin, ETH, and Hex. So if Bitcoin to Bitcoin, obviously it's 1-to-1 because one Bitcoin is one Bitcoin. ETH to ETH is 1-to-1. Hex to Hex is 1-to-1. But over a 1-year time frame, Ethereum was doing the same percent moves, same type of price action as Bitcoin 90% of the time. Meanwhile, Hex was doing the same type of correlation to Bitcoin only 57% of the time, which marked it as a positive correlation. But it was like not like a super positive correlation, like not like ETH, where Bitcoin moves one direction, ETH's going to move the same direction. Whereas Hex only 50% of the time would move the same direction as those assets. So if you zoom down though and you go from the year time frame to the 30-day, this is painting a completely different picture. ETH to Bitcoin is still 88% of the time correlated in the same way, but Hex has completely decorrelated away from whatever the larger market's doing over the past 30 days. You can see here with only a 4% or 10% correlation, which is a very weak correlation, meaning that Hex is already decoupled away from what the market is doing, because the regular market of crypto has ran hard and Hex has been slow chopping up and sideways, building real solid organic demand. And this is real momentum that happens on chain. So when the sentiment flips by the broader population, the rate at which this thing is going to rip higher is going to be unstoppable and uncontrollable. And when you factor in like the type of momentum that can come in on like a pulse chain announcement or some sort of like documentary release or some sort of news event that's pro Hex, maybe we get the first ever bank that puts direct purchases from a bank account. Wouldn't that be cool? I know Rackham Rochelle's working on an exchange. I know 0x Coast is working on some form of an exchange. So if these guys come out with real products that live up to the hype, there's different things that can come along that can make this thing even go viral faster.
Yeah, that's fascinating about the 30-day. I mean, it makes sense with what you see there on the chart. Now, my question for you is, seeing this decorrelation, is I wonder how many times we've seen it in the past. I wish they had like a time frame of like 6 months, maybe 4 months, something like that, just to get some more perspective. But overall, it seems like Hex is decorrelated. And I think what you said about the this is where my question comes in. Your point about the the sideways volatility and the chop there, and you may get another chance to buy in. It reminds me of the last bottom Bitcoin made, where it had put in the real bottom ages ago, and then it put in another like scam wick all the way down as another
I have a chart for you. So I posted this on Twitter. I don't know. Let's see. When was that? 3-4 weeks ago? Let's see if I can find it. Right here. So on January 8th, I took the 2019 Bitcoin bear fractal and I overlaid it onto Hex price. And so the irony here was that Hex was literally bottoming on the bottom point of what was Bitcoin's triple bottom, which was actually the launch date of Hex originally 2 years prior. Is that not fascinating?
It's hilarious.
And so like that basically says that the bottom was set here, and now we've just been slowly grinding up in the same way that Bitcoin bottomed here in 2019. And that now we're going to start to trend up. And if you get a fundamental news event, you'll see a huge rip up, like no doubt about it. But this isn't saying that, if, as you can see, to your point, you get that pulse chain launch somewhere out in 2023, and then you get a full inversion of price where people basically exit ETH Hex and they go into PHEX, or maybe you see just a redistribution of weighted portfolio balances. between the two chains. And so that's why you get this huge sell off. Not to say that Hex would make a brand new low down to like 2/10 of a cent, but just that the possibility for some sort of capitulation wick down is not only possible on the Hex chart, but also it's possible on the main crypto market. But to counter that argument, also go against my own argument, it's very possible that you see this kind of action out of Bitcoin and Ethereum over the next few years in some sort of when people get super hopium and bullish. Let's say Bitcoin rallies up to
30K.
like 30K or something,
Yep.
which by the way would coincide with like this rough level here, which is where we tried to find support, and then Apple dumped. I think it was Apple dumped there, or maybe it was Tesla that dumped there. And so you just basically get some sort of a move up into this zone here, and then people who think, okay, we're going to 50K, but the thing completely inverts back down to there, something like that would be totally within the cards, and that would still give you one more chance to buy the bottom here at 18, 19, K. And let's say like we get some macro pressure, and then it even goes lower and makes that 11K target before finally bottoming out. The amount of violence that would come out of here, it would be nasty. It would just be, and I've seen this pattern print before, where it's like basically like you bottom, you wick straight back up, and then you like make this curved structure like this over time, and then it starts to flatten. Then you start to get the real bull market starts. So this would be the one way I would anticipate the amount of volatility and nastiness that's coming for the larger crypto market. But now for Hex, we've already started to decorrelate. So like even though Bitcoin and ETH are ripping hard, Hex is just slow churning. So it's on its own time frame now. It's not playing by the rules anymore. And now we're about to break. Let's see, I think this is like almost 500 days of downtrend resistance. I want to say it's. I don't know the exact time frame here. Yeah, 498 days. So literally 500 days. The math couldn't be better. And we're just piercing our head through. Damn, that's good.
Yep.
Yeah, you just pierced our head through today. So decorrelating from the market. Oh yeah, the liquidity. Where am I at here? Just to show you guys what I meant by this. I never did finish up. Effectively what you got here is you got this liquidity squeeze that's been happening for many months. And we have now broken above, and you can see here we're now in no man's land, where the amount of liquidity sitting in the pools is now broken out of this squeeze. And because there's no more big dumpers left in Hex to really affect price in a negative way, as that guy tried to with 150 mil, how many other guys are going to take a stab at losing 150 mil and have to buy back higher? I mean, maybe they just want complete exit, but then they're out, and then the price is going to come back because it's already proven that it could do it. Right here on this wick. This was the biggest wick we had since August of 22. So I mean, it was like almost 6 months ago.
It's a serious rejection of trying to make a new low there.
Yeah, when you're talking like 6 months of time to get this level of a sell-off, and that it didn't even break trend, like, I mean, come on, guys, that's just in your face. The bottom is in. The worst case that could happen is some coordinated sell-off on some capitulation, and Hex somehow recorrelates, and you get a retest of the low, which would just spike right back out, and then you go because of the amount of bid demand there. I have so much other stuff to talk about. We nailed liquidity. We nailed. So you can see here we're out there in the wide open here. We're just farting around, getting ready to start to build structure and go out higher. So that means more USDC available in the pools, which means people can start selling into liquidity, into strength. And one of the charts that shows this is, I pull up this chart and pull up the LP, and I get rid of the moving average. Well, I'll keep the moving average. Check this out. This is kind of cool. If I go to like a 3-day or something, maybe go to a weekly. Just makes it cleaner to look at. All right. So the price is now. Okay, I guess I got to kind of explain this a little better. So this white bar here called liquidity gap, what that is it's a period of price in here between 2.9 cents and 3.26 cents where the price will get more volatile inside of there. So if I go ahead and delete all this out, you can see it very clearly here. I'll go bam, bam. That's what we're up against as far as volatility. So we can get through it quickly. We can get rejected out of it quickly, but this is all proven to be support now in this zone here. And then until this is proven as support, it's resistance. So what we need to see here is we need to see the price get up to here, spike through, and then maybe some big volume comes in, pushes the price up into these upper bands of price between 3.3 cents and 5.4 cents. And, and then this is an opportunity for this to become support, anywhere in here. What you don't want to see is to come back and test, then fall right down through here, and then fall into this liquidity, and then this gets weaker and weaker and weaker, and then it starts to fall quickly. But as I said before, we had that here where there was almost no liquidity here, and the price just shot right back out because easy down, easy up. Just like out here, if the price were to break through here and then slow churn up, kind of sell off, people take profit, and you start to get the move, the high volume comes in. As soon as you get to this point here, price can go like vertical because there's absolutely no liquidity out here. In the same way that there's no liquidity on here. So volatility equals low liquidity.
I think what's important to say there too is because liquidity is always changing, right? So obviously if we were slow churning around 3.5 cents, like the liquidity pools are going to move to, always kind of shift within that. But in general, like the overall state of Hex, right, as a low flow asset with low liquidity, if a whale were to come in and move things, which God will has done before, we moved from 12 cents to 36 cents in a day. Once a whale pushes us, if that happens above, like if they were to do it within like 20 minutes, an hour, 2 hours, and it's not that much money. It's not like Bitcoin where you need massive amounts of money to get through these order books. It's not a lot. So if it were to be done, people can't throw liquidity in there quick enough. So that's where the price would move from 8 cents to 30 cents in a day. Is if you break above that what's available there. And then there's a few other areas that there's liquidity, but USDC on Uniswap is typically I think the highest volume, right? For trades.
So this is the Uniswap V3 Hex USDC pair at 0.3%. This is where all the money is. So effectively inside this pool there is, I want to say there's $3 million. There's $2.6 million of USDC in there.
There you go.
I mean, dude, if you put in 2.68 million more, it's supposed to double the price.
And then not only that, but there's nothing above that. So people will just be buying, and then the price is going to rip up.
And it's not like the other thing too to keep in mind is like that's easy for noobs to get confused because if you put let's say Godwill injects 2.68 million, price doubles. It's not just him there buying; it's tons of other people also buying, which is what creates that momentum squeeze.
Yeah.
Right.
Because the momentum shifts with price going up, people get excited and want to buy more.
100%. And you can see every time here, I'm going to pull up this volume quick. Show you guys this because if you haven't seen this, it's important. Basically, anytime that volume trends down, it's met with a liquidity injection. Volume trends down, liquidity injection. Volume trends down, liquidity injection. Volume trends down, liquidity injection. And these are bigger and bigger moves in price every time. And so like the volume's trending down. And by the way, the amount of time it's taking for this to hit rock bottom is less and less. The time from here to here is longer than the time from here to here is longer than the time from here to here, which is longer than the time from here to here. So like the amount of time is getting less and less, meaning that there's the sentiment is changing. The amount of buyers is way more than sellers. The amount of liquidity injections is going to increase. The amount of big whales that's going to need to accumulate faster is going to increase. And all of these compounding variables is going to stack and make basically start creating lots of structure in this liquidity, in this volume chart. You're going to see more volume come in, like I said before, on the chart here, when the volume is going to try to push us through this level. So one nice boost of volume, bam, you're back above here. And then if you can get some continuation of volume coming in, you can come back in here, play with these levels.
Yeah.
And then when you get up to here, if these guys down here don't reset their liquidity up into these bands here, nothing changes, then this is just vertical.
Yeah.
Right. But what's going to happen is people are going to get the price back up into here, and this is going to start acting as support. A lot of times what'll happen is it'll shoot up on volume, then it'll come back right back down to here. Someone will try to sell, and then bam, it'll get bought right back up. It'll start to go up, bam, it'll get shot down, shot right back up. And then eventually this becomes support. Now all these guys that's in here has to reset their liquidity up into higher ranges. And then this liquidity chunk keeps moving higher and higher up on the chart. So that we
That
start
takes
trading
time.
in higher and higher. Yeah, and it takes time,
So,
which is why Hex is decorrelating away from the rest of the assets, because there's so many more things going on with the market making.
dude, I remember. So if you go to that first pump up when you had that first capitulation down to 12 cents, and then we ripped up, it was like in like a, I forget what the time frame was, but it was Guy Will started buying, and we just flew up big time. And it was like within a day, we'd moved up from like 12 to 36 cents or something. It wasn't, here, let me pull up. No, don't let me pull up my chart. I'm just going to look at my chart over here. It was, because it wasn't for Pulse X Sacrifice, because it was in December. Oh no, it was here. This is what it was.
Do you want me to pull up your chart?
It was yeah. Actually, you can. Sure. Okay.
Yeah, you're live.
Cool. So it was over here. So this is the Pulse X. Hold on. So this is the Pulse X Sacrifice here, right? I'm gonna mark it with yellow so people can see it easy. Right, this is the Pulse X Sacrifice here. Okay, maybe not yellow. We'll do
Black, dark, blue. There you go. I can see that.
So that was the Pulse X Sacrifice. But because we're on log and it's been so long, people are forgetting what actually happened over here, right? We dumped down, and I'll draw it again here. We came down to 14 cents, guys, down here. This is in freaking November of 2021, right? And then we ripped up. This is Godwell buying within 3 to 4 days, all the way up to 28 cents. So you did a 2x in like 2 to 3 days. And it stayed there. Like we did it in 2 days. This candle here wicked all the way up to 28 cents. That's what I mean about the order books being thin. Now the macro sentiment was terrible, right? We were coming down. We were already in our downtrend. We'd already started our bear market, even if people weren't recognizing that at the time. So the point is that stuff you just mentioned, resetting liquidity pools, takes time. It takes time to do that. So when you see buys come in quickly within a few days, that's just like these low float stocks that are trading in pre-market, moving a few dollars in a day. It's just because the flow of the shares traded are very low. And that's what Hex is. There's a small amount of Hex available across a limited number of pools, and that takes time to restructure and rebalance. So to your point, these slow moving trends can kind of just form this slow upward movement, right? That's normal. But these violent ones, like this one here, where we moved, what was it, like almost 100%, 60% in a few days, and that wasn't even that big. And it does depend on what's going on with the order books. But the point is, when you said like, hey, if the narrative shifts abruptly and you have a few whales coming in that are ready to move this thing, and let's say we get like a time frame on pulse change, something like that, that is where you see another, 100% move, back up to here within a few days. So I would not be surprised to see us back like the 5.5 cents, 6 cents in a few days. And if the news are big enough, like that's it. Hex can do that. And then all of a sudden you're going to see everybody's narrative shift. Everybody's mood and emotion to what Hex is totally change. The key is you don't want to be left behind on something like that. So you want to get skin in the game here, whether it's here or here or here. I don't think is going to be really inconsequential if you have the right mindset on the asset class itself. So it's just really cool to see that people have forgotten it's been so long. And Hex has been such low volume recently. People have forgotten what volatility does to this asset, man. They've already forgotten about the Pulse X Sacrifice and that this thing did a 3x in a week.
Yeah.
And that's in a bear fucking market. You know what I mean? It's like people forget. They've definitely forgotten what the bull market, what this stuff feels like. They don't think this can ever happen again. And they've already forgotten it, even a bear with enough volatility and a thin enough order book, that one wallet like the Godwell can move this up with another 10 day traders can move this up 2x. Yeah. So we're getting closer, I think, to what you're pointing out here. We're getting closer to where the trend is shifting structurally in a positive way. So when these factors that move the price here come back in, you have these big moves to the upside. So it's really just an indicator that even if we do sideways chop, you're getting good prices right now. And you don't want to be left behind when something like that happens. Because I remember the day it happened with Godwill pumping and we went up 2x. I'm like, I was at the gym and I was like, I don't know what the fuck's happening right now. Like, why is the price going from 14 cents to 28 cents, 30 cents in a day? You know what I mean? Like, I just didn't get it and didn't understand quite as well back then. And we just have forgotten. I mean, you see this slow movement, this slow chop. Like, we've had some stuff, but people are they're just discouraged and they don't think that the volume will ever come back in again. And this is a long time. This is almost a full year. Think about this. This is a full year the price has been range bound.
That's crazy. Yeah, and that's not even so a year in that range, and then
look at that
500 days in the whole thing.
Volatility all before range bound.
So
Hex for Hex terms, this is range bound, right? This is very much range bound for Hex.
So when Bitcoin did this, I'll bring up my screen quick. Bitcoin did it in 686 days. So we're at day 500 on Hex right now. You can see that in the lower pane here. On Bitcoin, this whole first market cycle when we bottomed in 2015, that was 686 days before you broke out. And so right now we're only on day 500. So you could break out of this shorter term trend, this 500-day trend here, but not break out of the larger trend for another like 150 days, which is why there's still opportunity in this for some time. And if you just copy this Bitcoin trend, like you could get back to the red line somewhere in the next 150 days, then reject back down for a double bottom. This is going to be extremely sideways and volatile, but this is like the last call, guys. This is this is it before you start your bull cycle in 2024. So
I would agree.
Bitcoin's did it. Hex has performed in the same way as Bitcoin and Ethereum, and I can prove it with this chart here. But what this is it's Bitcoin's logarithmic growth curve, but it's put over Ethereum. And all I did was I took the Hex price action and matched the bottom, and then look where the top ended up. They almost overperformed Bitcoin's logarithmic growth curve in the same way. And now literally where we just bottomed on the Hex chart is literally at the bottom band of this. I didn't like fit this or anything. This is just how it ended up by basing it off the base of the original low here. That's all that I did. And so like, look at that. I mean, isn't that not in your face? Like trying to also reinforce this point that like Hex is on its last, it's even if you get a year of sideways and volatility, traders are going to start to trade it. More volume is going to come in. Long-term holders are going to keep accumulating. Eventually, there's going to become a shortage of Hex in the market. And this thing's going to start to create structure and go higher going into 2024, 2025. So it's in the charts, man. Like
that lines up nicely with, we're going to get good confirmation on where things are going to go with the Federal Reserve, interest rates, unemployment, some of the key factors, right, that really mark a couple key things. Number one, when we're going to potentially see a pivot. And by pivot, that doesn't mean a good thing is happening, right? That typically means really high unemployment, and that the Federal Reserve, as they've been quoted before many times now at this point from their meetings, have said, we have all the tools necessary. They didn't have the tools in 08. They had the tools in 2019 when the reverse repo market blew up and the banking system was about to go down, and then COVID happened. And they have even more tools now to prop up the markets. They're very confident in that. So when they pivot, there's going to be capitulation, but that's going to typically mark the actual bottom. You know what I mean? So this hopium, this trend that we're seeing, could Hex decorrelate? Yeah, and I think we should check out the Hex BTC chart in a little bit here.
We will.
So this is not about Hex. This is about overall market.
This is what that flip on interest rates would create. Would be this massive. So what happens is if interest rates fall quickly and hard enough, smart money dumps the asset because they're like, well, why wouldn't I dump this asset here and then go borrow a bunch of free money at the low and then buy it back up?
Plus, there's usually a lot of negative news and sentiment because something really bad is happening. Like, when COVID happened and people thought people were just we're just all gonna die, or in 08 where people were losing their houses. You know what I mean? Like, there's usually also some negative market sentiment that also pushes retail traders out and just more negative sell pressure versus just the smart money. So typically it's not like a sign that market's going to go higher. So this this trend that you're seeing, man, I'm sorry, this is still such a bull trap for everybody. That is my still absolute conviction on it. And it doesn't mean that if you buy now that you're totally screwed later, right? If you buy Hex right now and it goes back to 0.018 and then goes higher forever, okay, you're in the red for what, a week or two? Like for an asset that does 95% corrections, that's not bad. You're not going to catch the exact bottom anyways. I'm not talking about people buying here. But you just got to understand where we're at in the cycle, where we're at with the Fed, and that likely the next 6 to 8 months is going to be crypto getting out of the bear market first, then it's going to be stocks, and then the housing market's going to be last. But there's still a lot yet to be seen with what the next few meetings hold. So I think you're going to see a lot of volatility in the markets here in the next 3 to 5 months for sure. And I think that lines up nicely with your time frame of like that 100 to 150 days. And Hex may not give a crap about any of that. Pulse chain could change all of that. Trust
100%.
me.
As the correlations over the 30-day is
Yeah.
saying, is that Hex
So
is
we're
already
totally outside of that.
decorrelating away.
Yeah,
100%.
we're very much outside of it.
So all that manipulation happening on Bitcoin and ETH to move it to the upside is not affecting X that much. It's like uncorrelated.
And it's cool. It genuinely is cool to see. It's genuinely cool that we have people. I forgot that guy's name with the C word in his Twitter handle. He's making the fiat on ramp. Either I think it was through debit card or credit card. I can't remember the exact setup that he's doing, but to me, that's all it's needed for onboarding. You know what I mean? Like we don't. Onboarding is always going to help, but we need people that are more convicted in the asset class itself. And then, of course, we just need to not be fighting some of these external parameters, which is people are going broke, they can't afford things, inflation's high, and they're selling assets. They're more discouraged, or they're acting out emotionally, so it's causing even more sell pressure than usual. It's typical bear market behavior versus the bull market where nobody thinks anything can go down. They don't need extra cash. Things are in a good spot. A lot of free money going around. So, of course, they're going to hold for a longer period of time and not sell. So, yeah, I think it's going to be really interesting to see. Yeah,
I brought up your Fed funds rate chart basically since Bitcoin's inception, and it's just interesting if I show you what I'm seeing here. Hold on a second. You can just look at these patterns. So like when money was free between 2009 after the GFC till 2015.
Yep.
Bitcoin just moonshotted when money was free, and then Bitcoin bottomed when rates started to increase. So rates started to increase. And by the way, shout out to Ben Cohen for giving me the idea. Then as rates started to, when they said we're going to increase rates, Bitcoin actually went parabolic because of insecure monetary policy. Nobody knew, like, basically the thinking here is that central banks are the bad guy. They're in full control of the economy. And so if you don't trust them, why not buy an asset that's totally going to be decorrelated from the regular economy? And that was like the thinking here as Feds raise rates. Well, then you got Bitcoin started at the top back here. So what that equate to in Fed funds rate? Fed was only half done raising rates at that point. So Fed continued to raise rates all the way up until here when Bitcoin bottomed in 2018. And that's when they paused. And then look at, as soon as they dropped rates, Bitcoin freaking ripped. Then they dropped rates a second time. And that's when COVID happened. Let me delete this. You can see
that was
here
that weird second double bottom we made.
Alt V. So to check this shit out, this was the COVID crash where Bitcoin went from like 9K to like 3,800.
It probably wouldn't have. It probably would have just kept going up had that not happened.
And the thinking was like, okay, I got a bunch of Bitcoin at $9,000. Why wouldn't I just dump it now and make a scare, and then buy it back with all this free money? And that's exactly what happened. Was smart money exited and freaking bought back with free borrowed money.
Yeah.
Now we've seen the same thing happen again, where in 2022 or February of last year, Fed starts raising rates, but this time Bitcoin is still in a nasty bear market on all that extra leverage and centralized exchanges. And so the thinking is that maybe Bitcoin is trying to tell the story that the Fed's about to pause or slow down rate increases to like 0.25 basis points, which means this curve will slow down a little bit and then start to pause and then round out. So you're looking for that price to continue up, and then eventually it'll stop. And then when Fed's like, all right, we're going to drop rates, that's when you'll get the capitulation low on Bitcoin. That's when the smart money will come back in and buy cheap Bitcoin back with all of the free money, when this thing just goes straight down back to cheap rates. So that's kind of like my little hot take on that. Now, how is Hex affected by any of this? It's probably not as affected by any of this because it's starting to decorrelate away from any of the price action of that stuff.
Hex started its bear market when we had very easy monetary policy. It didn't care. Like we didn't even start raising rates when Hex started dumping.
Oh,
like
yeah.
The conversation had just begun, right? And remember that? Remember what Powell said? He's like, we're not even going to think about raising rates. And then that narrative totally shifted.
March.
Yeah, we just came down because people started realizing Pulse Chain wasn't going to launch that quick.
No, this was way back in when the. Oh, you're talking about now. I'm talking back to COVID when.
Got it. Okay.
When they dropped rates to zero, the way that we came out of that move was, look at this violent move. That was like a 10x in like 60 days. It was a 3,000% move. From the wick low, it was 5,000 roughly percent in 56 days. So my thinking is like, you know, Hex mostly is decorrelated now. It starts to chug back up to this blue line. And then maybe you see some sort of a harsh rejection on lowering rates. And then that free money comes back in and just takes us way back up to like that 20 to 30 cent range, back up into this general channel. Because like anytime that the price of Hex has dropped 99% or like 95 to 99%, like such as back in the beginning. I'm going to pull up a different chart here to show you the very beginning of Hex. This is that initial does that technical now. Okay. Go to a weekly, go to the log chart. Look how nasty that initial dump was. It was basically straight down. So price dropped 98.65% from the starting price. And so the thinking here is like, well, look at, we're back down 96.62%. And so like I did a chart on this like not too long ago on Twitter that basically measured the amount of length of time it took to recover. So if it took 154 days to get back up to the top, but 42 of those days was down, then that means that basically 40 goes into 150, 40, 80, 160. Basically, it's basically 30% of the time it was down. So all you have to do is measure out how many days from the top to the bottom, 469 days times 3, because it would be roughly 30%. So 469 times 3, 1,470 days, or I'm sorry, 1,407 days. So this is roughly what you're looking at for time frame. And so the amount of time down was that, which was about 30%. So if the same theory applies off the low, you got back up 696% in 7 days. How many times does 7 go into 154? 22 days, basically. So in 22 days, the price can get up 650%, basically, if it happens the same way twice from the low. So let's see here. Oh, my math's off. Yeah, 7. Okay. So the point here is that if you take this fractal and you spread it out over the entire pattern, the entire time frame, you can get back up quickly, back up into that like 20 to 30 cent range in like a fraction of the time, basically, is what I'm trying to say. Like, so when the move comes, it's going to be so violent and it's going to scare the whole market into like, shit, now the market's going to be forced to follow the green candles, is the thinking. So something to think about that way. I think it looks better on a daily. Let's see here. I'll just catch the bottom here. And then we'll go out to like, because essentially price action might not always go exactly the same twice. But what was it, like 1,400 days roughly?
I think so.
1,407 days, I think. So just by the mathematics of it, let's say you get like something like this. Like, okay, so then that means that if Hex decorrelates fully, the next 170 days, which remember that is roughly, it took Bitcoin 680, what was it, 689 days to bottom, roughly, on 2015. Let's see, 686 days to bottom. From day 500, it would be 186 days. And look at this, from the bottom here to here, 190 days. So it's literally, swear to God, it's trying to print this ascending triangle pattern. And when it finally does decide to move, and it can happen any time inside of this pattern over the next 180 days, you're going to get that like volatile spike upward again, where on some sort of news event. I don't care what it is. Some good news event and good sentiment change, like, and just fear of missing out is going to propel price upward at a rapid rate and leave all of these guys that did not buy this zone behind. So the prices can stay down a lot longer and a lot lower than you expect until they're not. And then they can rapidly get out of there. That's just the way crypto moves. What else? What else? Just looking at the future market supply here, another big thing that's coming up is there's like 6.5 billion hex coming out on, I think this is like the second week of February. And so that's Godwell's big stake. I think he staked a ton of hex. But if you assume that he's not going to dump this big bag of hex, let's go out a couple weeks into the future. We're basically back to baseline as far as like staked hex. You're basically back at, this is 2030 here. This is now, or it will be the third week of February.
Mm-hmm.
The amount of hex stakes coming out, it just declines going into 2030. And so this is all going to be less sell pressure on the market as market prices increase. You'll always have that like wave of sellers that will sell, you know, between $20,000 and $50,000 of interest every 30 to 60 days. But that's still not enough to keep the price down because of how momentum is going to be so strong coming off this bottom, effectively.
And the share structure weakening that strategy.
Yeah, and then like in behind you can see the cumulative shares expiring going up over time, and so the share rate will increase, so that the amount of shares that they'll be able to acquire will be less unless they stake for longer. And so then the more that they need to sell, the more they'll have to sell of their principal, meaning that they'll get less reward long term. And so eventually they just get weeded out anyways. And this is kind of showing you what the share rate's doing over the next 15 years. So that, you know, by 2025, in the peak of our bull market, T-shares should cost somewhere around 40,000 hex, if not more. It's more if you consider that adoption increases, and this should be like something that Hexicans try to do more of, is, you know, helping people understand how to get into X, because that's really you can't deny that it did a 10,000x. You can't deny that the price appreciation is good, or like that it 2x's on a dime when it's ready to go bullish. So that all fundamentally plays into this. But so like by 2025, your share rate should be anywhere from like 40,000 hex per T share to 44,000 hex per T share roughly in 2025. And by the end of 2025, it could be as high as 55,000 hex per T share, which is like over a 2x from where it's at now, meaning that the perpetual dumpers will get half as much yield as they do now effectively. And so it should counteract any price increase to a large degree. So yeah, that's kind of the way I'm looking at the system right now. Just something to hammer home is like I was watching a video from this Frank Calabro Jr. guy, and he's basically saying that the biggest problem with Hex right now is that we're just not bringing on enough stakers. Like the fact that you can't get 300, 400, 500 stakers a day, it means that that we're not reaching out and showing people like what this thing's capable of or how good this crypto is.
I think a lot of that still comes from like the overall market sentiment. Like I feel like we had less people in the community doing stuff than we do now back in the beginning of the bull, yet the price went up the highest, and that's where you saw a lot of adoption come in, because once the narrative gets attached, whatever it is, the price is moving. You know, when the price comes up, you're going to see insane adoption. So you like look at adoption numbers over the year where the bull market was versus now.
Yeah,
the adoption on every crypto is lower.
We were getting hundreds or
people,
300 a day.
I feel like they just try to look for so many reasons why the price just can't go up forever, and not understand that every coin is down right now. Yeah, and it's likely that all their adoption rates are down right now. And
that's a good point. No, you make a really good point.
In general, though, he's right. Like in general, everybody could always do more to bring on more people, but in like overall, we can't fight.
The thing is, like I feel this. I'm torn because I agree with him, But I
Mhm.
also feel like you can't make somebody, you can lead a horse to water, but you can't make it drink. Like you can show people what it did and how good it is, but until the candles start to print 300 or 500 or 600% moves in a week, people do not understand it. Like
Yeah.
they're so tied to the dollar standard in their mind that their whole entire relationship to the society is based on a dollar standard.
Yep.
And so these people are just lost in the sauce, and it's a damn shame because these people are going to get left behind in Hex and all these other cryptos the same
Yep.
way as they got left behind on Bitcoin for 12 years straight. And it's like you can't, you're never going to force people to do something that they don't want to do. And so like I agree with him, but at the same time I'm kind of like, well, they'll follow, they'll buy when the price gets back to 56 cents. You know what I mean? They'll be
This
the
is how
ones
you
that's
refute it.
taking us.
When you have coins like Dogecoin, which has the easiest onboarding on the planet, everybody knows about it. Why is that down in price? Why is that doing the same market cycle? That's the easiest thing in the world to buy. Everybody knows about it. It's got easy onboarding. Everybody knows about it. Why is that not breaking and bucking the trend then? It's not, because you can't tell someone to buy something who doesn't want to think about it, learn about it, or anything, because high inflation rates, unemployment, layoffs, like this, that's the situation we're in. So Hex going down this much, people keep fighting it.
And here's
Richard keeps
Dogecoin,
telling
it's
us that,
down.
yeah, Richard tells you that it's a function of the product. It's supposed to have insane volatility. So when like I see Hexkins coming in here wanting to fight the fact that this is down so much, no, that's the part of the product. If you don't want something that doesn't go down that much, go buy Apple stock. It goes up and down 1% or so every day or something. You know what I mean? Like that's stability. This is the point of the product. And so it doing a larger move to the downside, there's always macro environment reasons for that. And there's always like reasons like pull sheet, stuff like that. So maybe maybe we shouldn't have never really done a 97% correction. Maybe it should have been a 90%. It's like, does it really matter at the end of the day? It's still a big correction. Like you're noticing a lot of the fundamental pillars of investing in this space are not yet learned by a lot of Hexicans. I think that could really, I mean, shit, if we would have just not lost all the Hexicans we've lost this cycle who sold all their bags because they're pissed off, I don't know, where could the price be right now? Who knows? Just for keeping those people. So look to coins and ecosystems that have the most easy Robinhood bullshit based onboarding process in the planet, and they still do 85% corrections. People
100%.
fight that. It's like, of course we want to onboard new people, but we can't like pin that as the reason why this is happening with what's happening right now. We're going into an unprecedented rate hike schedule we've never seen ever. It's like, dude, what did we think was going to happen? Like looking back is always, hindsight's 2020 when it comes to that. But I don't know. It's weird to me when people want to do that instead of just saying, hey, go make money, go create value, get skin in the game, DCA in. Some people are saying this, and understand based on all the things that you just talked about, the narrative shift that we talked about, on top of the decorrelation we talked about, that this could move at any moment without you. You have to be at
100%.
peace knowing that that's the way it is, man. When Godwill came in and pumped it up 2x in a day, I didn't know what was going on. I wasn't at my computer. I didn't have my keys on me, obviously. I wasn't going to like whip out Robinhood and buy some while I'm at the gym. Obviously, it's not how Hex works. You could do that. If you see Elon Musk tweet about Dogecoin, yeah, go buy Dogecoin on Robinhood. You'll be okay. But that's not how Hex works. So you're going to miss it. Unless you're staring at the chart, streaming while it's happening live, cool. Maybe you have a chance to get it on the run up. But
that's the whole point of staking, right? Is like
exactly, and that's the whole point of the system.
And here's the other thing too: is like if you're a Hexican, you listen to this, and you are one of those people that encourages everybody to stake, and if they don't do it, they're retarded. I mean, you're half right, because like there are strategies that you can employ that do not stake pre-fork that have good outcomes, and even if they're higher risk outcomes, they're still good outcomes potentially.
Yeah.
So there's gonna be people that wants to play that game. And then there's going to be people like me who wants to ladder out and have a for sure yield there for a long time. And I'm glad I did that, because had I not done that, I would not have maintained all those free airdrops, gotten all those 10x minting bonuses on Hedron. I would have not gotten exposure to communists. I would not have had exposure to any of this stuff that I got for free. It was free money given to me just because I had delayed gratification in mind, and I wanted the long-term outcome positive, to be positive. So like the price is looking good. We've been over this enough. Like the metrics are still growing slowly, but once the green candles start to print, people will chase, because the fear of missing out, the pain of something going up without you is way worse than the pain of something that you just made 10,000x on go down. or even if you only made 200x and now you're down to only a 10x,
Mm-hmm.
that's painful, but you're still up 10x. Versus like if something goes up 100x without you and you had no exposure, now you start to resent that thing. You hate it. And then that's what keeps you broke and fucked forever, is like those emotions you feel. So tie no emotions to this stuff. It's just investing. And you know, invest what you can afford to lose short term for the long term gain, and don't shit on other people for their strategy. Well, you can employ your own strategy. And like there's so many
Yep.
different strategies that you can apply to Hex, especially when you layer on all these other contracts like Hedron, for example, which did a freaking 3,000% run in 77, 78 days, 3,300%. This was just a free airdrop given to. It didn't just do one good run either. It did a massive run in the beginning, 1,200% in 8 days, followed by a 3,300% run, a 3,000% run roughly in 77, 78 days. Like this thing's tied to the share rate. Right now, it caught support twice off the OA wall. So for those who don't know, the OA wall is a bunch of Hex sitting here at this price roughly. That big whales can accumulate a tons of hedron and not incur slippage. And so like that's good for them because then they can. This is basically supporting the price. So hedron is now coming up to test. It's in a bullish ascending triangle, and it's coming up to test the top of this downtrend resistance. And if you can get up to the 618 and hold it as support, the next level is the 786, which is a rip, man. It's 80%. From this level, it's 120%. And if you're a Hex staker, you're minting this stuff anywhere from 1 times to 10 times the amount that new people staking could get. So
Yeah.
you're going to want to protect this price long term too, because your stakes were long term. And the more longer term stakes you had, the more of this stuff you're getting. So like it's all price positive for Hex, because then this money then funnels back into Hex through the addition of this ICOSA contract. For those who don't know, and so the ICOSA is in a rising wedge here, and I've seen this chart pattern before on Hex back in the very beginning. It was back in pre-big payday, I think it was. So this was way back here. You saw this kind of same ascending thing, and normally this is a bearish pattern that breaks down, but what happened was it got caught on a wick here and then got back up into support, and then with big payday coming, whales just freaking ripped the price up to 1.5 cents. I think this was like roughly a 3x. So if ICOSA plays out similarly out of this thing, you know, you got your attempted breakdown, it failed. Now it's, you know, chopping inside of here. Gets us to the 1.618. That's a pretty good move. I'm pretty sure the ceiling price is right up around that level. So if you don't know, there's a certain ceiling price kind of that has been arbitraged within the HSI contract, so that it keeps ICOSA price kind of like locked into a certain range. And what I'll show you what that means by showing you this website that Crypto Sloth put together, which can basically project out what the ceiling price would be. So if Hex is 3 cents, T-shirt rate I think is like 25,650 roughly. It means that the ceiling price is $1. So at 3 cent Hex, the ceiling price of ICOSA is $1. Meaning before you could like go sell staked Hex on the market, on the auction market, and get a higher profitable return instantly. So $1 is way up here. So then that would mean you're 70% away from that ceiling price. So if this runs up in the same way that Hex ran up back here in October of 2020, you're looking for a nice gain. And this is all money that's going to stay within the Hex ecosystem and just be recycled over and over through the contracts, which burns Hedron, which makes Hedron more rare, which pumps Hedron price, which then effectively pumps the entire Hex contract because more Hex is being staked for longer. So it's just a self-reinforcing loop. What else I want to show you guys? Maxi, the whole Maximus DAO ecosystem. Ooh, Trio is now back to parity. So it's no longer on discount, guys. Trio is back to parity, 1-to-1 with a Hex. But Lucky is a 7-year stake and Deci is a 10-year stake. Perpetuals, they're on discount. So like you could get 9% off a Hex if you bought Lucky, and you could get 11% off a Hex if you bought Deci. So they look for opportunities in these perpetuals to get Hex cheaper than what you can get it. And then when the bull market comes around, I anticipate that these perpetual Hex tokens are going to they're going to come with huge premiums because they're going to be an opportunity for whales at some point in the future to come along and prompt these price back to parity, and then speculation will take them much higher. Just like with what happened with Maxi. Maxi went up at 2.5 Maxi or Hex to a Maxi, meaning you could get 2.5 Hex for every Maxi you owned at the peak. Right now it's at 1.33. You can get 33% more more Hex for each Maxi that you own. But you're losing if you buy Maxi now, you're actually it's cheaper to buy Hex now than it is to buy Maxi because you're going to get obviously you're going to get more Hex now than you're going to get Hex through the Maxi redemption at the end. But each one of these stakes is printing interest and getting that 10% bigger pays better bonus. And obviously, like in the case of Maxi, it's a 15-year stake, so it's getting the max interest rate. Same with Deci, which is a 10-year stake, which is getting the max interest rate. So Deci's got my eye right now. It's low liquidity, so it can be volatile, and it can stay on discount for a while. But it's like another thing it's just more optionality for you as a Hexagon.
Do you know what has my eye?
What's that?
You. No, I'm just kidding.
Let's go.
But no, the
Chippendales CA, baby.
The Hex BTC chart. Can I pull mine up quick?
Got it.
Remember last time we spoke, we covered what Richard had said and how Richard had been linking. And I talked with Wales about this actually at a stream on Discord Syndicate. I said, hey, Wales, how come people aren't paying attention that when Richard replies to people, because people go, oh my God, Hex is down by whatever, right? 80, 90%. And Richard would reply, and I'm sure some people watching have seen this with the Hex BTC chart. And a lot of people are still even to this day missing this. This is all Richard cares about. This is it. He knows that this is supposed to be volatile. It's supposed to go down this much. It's not a big deal to him. He doesn't care. The price chart looks fine to him, right? So all the bickering about that doesn't matter. Richard cares about this chart. This is the only chart Richard cares about. So when he links this, it means that this is the chart he doesn't want to see go bad. Notice that it hasn't gone bad, right? Now, I thought with these two vertical lines coming out here, which is the first breakout on the next bull flag formation, the pull, and then I thought, I tweeted about this. I was wrong. I thought we were going to break out here, and we didn't. So I took a bar pattern of this fractal here. This is what I'm kind of expecting to see, something like that. That's what people need to look for when you know that the pump is real. And by real, I mean we don't have God will come in and it just dumps even more, right? Those aren't real sustained moves. This is what people need to be looking for. This is the only real indicator, because Hex could do this outside of market sentiment. I mean, like I said, the bear market on Hex started before everything else. Way earlier. It was like 6 months earlier. It was like way earlier we started our bear market compared to Bitcoin. Bitcoin, of course, made that double top with the FTX nonsense, but still. The point is this is really what people need to be looking for. This is all Richard links. This is the chart he cares about. As long as this keeps doing this, ready? As long as this keeps doing this, he doesn't care how much the price goes down. That's all Richard cares. He wants it to be the highest appreciating asset ever created. Do you think he doesn't want to beat Bitcoin? You're crazy if you think he doesn't want Hex to beat Bitcoin. That's his goal. He wants the highest appreciating. It's on the Highest of Stakes documentary. He says it. So look to this man as an indicator of what's probably going to happen. He wants glory. This is why we buy into something that's centralized. No different than Elon Musk with Tesla. So you have to follow the psychology of the man that created the asset itself to get a little bit of a hint as to what's going to happen. Now, here's what I'm going to say for that. You ready for this? I think EHEX, I know people are making predictions that EHEX is going to dump big time. I don't think so. I think EHEX is going to perform better than BHEX. And you're probably thinking, well, that doesn't make sense because of the lower fees and all this stuff. Yes and no. There's already great adoption on Ethereum Hex. You're going to see the best adoption on Ethereum Hex first because it's Ethereum. Blockchain's new, right? 100%. So I think what people don't understand is big whales, people like Bitcoin sucks, but people still love it. It's just the fact that you can say you have a Bitcoin. You don't think that's going to exist here with Hex? It's the more expensive. It's going to be the harder to get, higher fees. You don't think people like that? People have the clock on their phone. Why do you think they want a Rolex? They don't need a Rolex. You're not going to need EHEX. It's going to be more expensive than PHEX. I think people are totally opposite, totally wrong. I think
Yeah.
EHEX is going to be the legacy area, the old school, the good shit. This is the shit that shows you have money. This is the shit that shows you are an OG. This is the stuff people are going to want. The little wallets aren't going to do anything to price. Like all the like onboarding and pulse chain, those little wallets aren't moving price.
Yep.
It's the whales that are moving it. So I feel like people are really off. And this is just me like kind of just talking. I don't take this to the grave, of course, but I think it's going to be the exact opposite. I think you're going to see this happen at some point within that 100 to 150 day time frame you had mentioned, probably around there. You're going to see something sustained. It's not going to fall back in this channel, and you're going to see it form support, just like this one, about a month and a half of form support above the flag, and then you're going to see a big candle up, and then she's
The
gone.
other thing to support that argument that EHEX will be worth more is the gas prices. So what that does is, because the gas prices are going to get so high, it's going to keep people locked out of their own money. Like there's going to be a lot of people that get left behind that cannot
Dude, the
liberate
mechanics
their
on
money.
that are wild, right? It's like,
they
what am I
can't
going to do?
dump.
I got to wait. So you have to wait even longer to sell.
Yeah.
Because
Right.
you're not
You'll
going
have
to take
to
a whole
wait till
hit.
gas comes down in order to liberate your stake. And
You
they're
know
going
what
to be
that's
going to
like?
their friends saying like, "Oh fuck, man, can I borrow some ETH so I can get my stake out?" Like,
Yeah.
trust me,
It's like,
that
dude, only
ETH,
big players can exist there. And that's like a rite of passage. That's like a glory. That's like a, like I'm better than you
100%.
situation. And humans like that. As much as I'm not encouraging that behavior, the point is, it's like the order books being so thin. You couldn't sell
The
because
game
liquidity
theory
wasn't
is
there.
better for ETH Hex from a legacy perspective. Like
I
with the
think
beginning
so.
of crypto, 100%.
Because
And like,
Ethereum's going to grow much bigger, in my opinion, than Pulse Chain.
yeah,
Oh, like Pulse Chain is so much to catch up to Ethereum. Doesn't mean that Pulse Chain is going to
I'm
be
not
amazing.
bearish Pulse Chain. I think Pulse
Exactly,
Chain
me
can do
either.
returns 100x to 200x, no problem. But that still leaves you with the problem of who's new that's going to come in to pump price. You know,
So, when you see a candle like this, right? Oops, let me get rid of
versus
this.
ETH whales that are going to actually need a store of value asset on Ethereum that they can take advantage of. You know,
When you see this candle here, we could easily fall back into this trend. That's totally fine, guys. Totally fine. I don't see crazy volume coming in. I don't see anything coming in. Like if we had a lot of volume coming in, a lot of big whales are buying right now, I'd be like, sure, look for this support pattern. Look for this support pattern above this bear flag or this bull flag. And we're probably, that's it. And then you're going to see a lot of disbelief. This is the thing. You're going to see a lot of disbelief. Oh, this is going to come back down. Because look what it did every time. It came down, right? Came up, oh, rejected. I thought it was this one, rejected, right? Eventually, it's not going to get rejected, guys. It's going to come up, it's going to hold, and then it's going to go up. And there's going to be a lot of disbelief. And those are going to be the people that missed the boat because they didn't have skin in the game and they weren't smart with their strategy. So, I'm not saying buy everything right now. None of this is financial advice, as everybody likes to say, but that's the pattern I'm looking for. I said it last time. I'm looking for it again. Like, Hex is still somewhat connected to the rest of the crypto market, right? It's connected to some extent with liquidity pairs, which are still connected to the rest of the crypto market. So this is what I would expect to see, just like it did down here. I'm sure there's a lot of disbelief down here when we broke out this is 1 cent, broke 1 cent here, something like that. A lot of disbelief. Hex is never going to break a cent. Hex is never going to make all-time highs again, whatever silly disbelief you have here again. And people are going to get left behind. So we're going to come back to this chart, bro. We're going to come back to this chart. We can reference the stream. Something like this is going to happen. This may have to get extended a little bit. May take another 2 months. But just like here, you see down here, see this big candle? And it got pushed down a little bit. And then it held. That could be the case here. I don't think we're doing that right now, but you're going to see something like that. And then push down, but then hold at a higher price point. And that could easily be Pulse Chain. It could easily be Pulse Chain, I'm not saying it's going to be Pulse Chain, but the Pulse Chain, depending on what Richard wants to do the game theory, does he give us 2 weeks? Does he give us 2 days? What is the FOMO? Where are people at? Where's the market sentiment at? That's going to really, I think, depend on a lot of that stuff. I prefer he just didn't tell anybody. I prefer he just launches it because I think both chains are going to reach parity very quickly.
There's an argument going around right now that Pulse Chain V3 testnet will actually just evolve right into the mainnet.
That's what I think. I think it's going to be live for a few days and then it's going to be it. Like V3 is done. It's just, we just want to let it be there for a little bit. Like that's, at least from a dev's perspective, what V3 is. People should ask some of the devs that are publicly talking about this stuff. What does V3 actually mean? Nobody's actually asked them that yet. To me, that's the most important question. Yeah. That gives you the most on time frame. And they may not be willing to disclose that, but to me, that'd be exciting to see.
I pulled up my BTC chart, Hex BTC chart here. Just like look at these candles and we haven't had this big of a green weekly candle on Hex BTC in a long time. None of these are. like the same. None
It
of these.
wasn't
None of
all the way
these.
back to December 21st, that
This
weekly.
December 13th was like the last massive
Oh,
one.
the
And that
13th.
was the
Okay.
Pulse X. I mean, none of these
Mm-hmm.
other ones are. This one might be as big, which was in April,
Mm-hmm.
not quite at Wicked. But like this one mostly closely resembles to me back here. You know, and that's coming off that 99% dip, basically. And so I'm expecting price to hold below that liquidity band, and then the volume is going to come in and just shoot us up like that, and it's going to bust the trend. And maybe that takes, you know, I don't know what that takes. And then maybe, you know, maybe it's a pulse chain announcement or something that takes us there. Or maybe it's just, you know, finally the whales are tired of seeing the price go down. I'm not sure. But the
It
thing is,
doesn't
like,
matter, but it will go at some
when this
point.
green candle prints, though, is like when that disbelief comes in,
Mm-hmm.
and then you can get your final rounded bottom, which is basically like you come back in, you reject, maybe you break back into the channel, but you still hold a higher low
Yep.
and you fight that level. But as long as we can hold that sideways, we're off to the races by mid end of the year, at
And
least back to 20 cents.
keep in mind, like, this is Hex versus Bitcoin. So what people need to
Yeah.
understand is Bitcoin could go down and Hex could be flat, and that would still move up. It's just
Yes.
the Hex price in comparison to Bitcoin. So Bitcoin could go down 15% on some bad news, and we get pulse chain out and we only go up 20%, but Bitcoin's down 15%, and that's blowing out of that channel, like flying. You know, so that's the thing. It's not
Yeah, this is
just price
showing you
performance of
that
Hex.
this correlations matrix on the 30 days average is basically showing you that Hex is not following what Bitcoin's doing anymore, nor is it following what ETH is doing either.
It's definitely interesting, man. The daily chart
Now,
Hex is looking
on the
real
year, it
interesting right
was
now.
the bear market really did affect us. We were like 57% and 65% correlated to Bitcoin and ETH respectively. But on the 30-day, we've already decorrelated away from them. So for those that are new in here watching, you missed the beginning. Hex is already decorrelating, and so that's why I think like if no matter what Bitcoin and ETH are going to do, Hex's organic demand is there. The sellers have been exhausted. All that has to happen for this candle to print is Bitcoin drops drastically and Hex holds the same price.
Mm-hmm.
And this can pop out of the channel. And then let's say that the Hex guys that like to arbitrage that opportunity over a week or two, they sell back down into the channel and take their profit in Bitcoin or ETH probably. And then that's it. Then they're out now too. And now we can create a higher low and just kind of work our way up and out of here.
Yeah, I just think it's gonna print. I think it's gonna print way above,
The
and
thing
then
that's going to
hold
tell you
above.
that we're close is when we start grinding against this upper grind line. Like
Yeah,
when you start grinding against that level and you're not just keep rejecting and rounding out of a parabola. For example, like this parabola has been broken. Like I gotta go back to something like this. Like see here. You got chickens? Is that your cat?
you hear that? Yeah, it's my
Yeah.
kitten. I have a couple of kids. You can hear that, man.
Yeah.
My door's shut. Oh my gosh,
Oh,
she's going
that's
crazy
so
right
funny.
now.
That's all good. So yeah, we're right there. We're about to on this particular Hex Bitcoin chart, we're about to go test that parabola. So
Yeah,
once
this
that
is.
breaks, you can get above, you can go play with that. If you want to see some grindage on that top line, you
Mm-hmm.
want to see us get back up to here and then grind along it, consolidate below it, pop. And then even if you invert back down, you can create some sort of structure out of here. That's what you're kind of looking for. And like I said, if you're new in here, you missed the first part of the show. Bitcoin did the same thing over 686 days. And so Hex is just on this last 180 days of this sideways volatility into the fall. And then by fall time, we should be rapidly approaching that like 20-cent level and trying to build structure up there. So that's just based on history of Bitcoin from 2015. The ETH chart I think is like kind of in a similar position, except because ETH hasn't ran as hard off this rally. Like Hex is actually doing quite well over there. It's going up to test the midline here on this falling wedge. Similar thing though that you're looking for. They'll act the same because ETH and Bitcoin are correlated together. You'll be looking for something like this.
The only reason why I prefer the Bitcoin chart is just because that's the one Richard always links. So
Yeah, I
just to
mean he
keep.
wants to see us outperform Bitcoin, and it's easier to
Mhm.
go up hundreds of sats than it is to go up in Vitalics or whatever.
If there's
they're called,
anybody
right?
that has the most control over the overall sentiment of that coin of Hex, it's going to be Richard. I think that's obvious. And if he's linking Hex BTC chart to say, hey, this is the shot across the bow, pay attention to this. Stop caring about the 95% correction that's normal. Stop bickering about it. Stop posting about it. Buy it if you like good opportunities, if you like good prices, and links this chart, the Hex BTC. It's just like, he started doing that like a good year ago, and like nobody talks about it still. Like that's the only chart everybody in the community should be posting about. That's it. It would take so much of the emotion out of this.
Yeah.
Unless you're over leveraged, right? That's a whole other problem.
I agree with you, dude.
Like I really think it could totally dispel a lot of the bullshit going on in the community and just ground people. Just get grounded again with what reality is and where we're actually at with things.
Yeah. Well, let me make a
like you think he's really gonna let that thing just dribble down?
You haven't even come back. You haven't even come back down to that like 69, 70 Satoshi level yet. So, and then above that, you had this level here, which was where we're back above that level. We went down for a week and came back up the next week. So, it's 100 Satoshis per hex right now. And I think that's a nice sweet spot. It's an even round number, 100 Satoshis. You know, it's easy for people to measure. Oh, if it goes back to 1,000 Satoshis, now I got 10 times my money, or 10 times my money. So it's just easy math. And, you know, with something so small of liquidity, it's easy to move price, and just people like round numbers. So I can totally see that argument. And again, we haven't seen that big of a spike since.
Yeah. There's definitely some interesting stuff going on with Hex right now. We're definitely at a pretty big inflection point.
Maybe here's like a good point to like measure it against something like this. You just need a few weeks of sideways grind like this, where it just holds its levels. And then it's going to be the signal where you break the parabola on Bitcoin, and then you just go X Bitcoin. So,
we'll stream again as soon as this breaks out. Like that's on my list. When I see the pattern on that I have my chart up, when I see that pattern form, I'm calling you Axis. We're going live and saying, this is it.
It's funny because back here, just looking at it, look at how it actually held the grind line to the top side.
Yeah, for like a 4 months. And I think that's what's going to happen again, only because of the news announcements. They're going to bring so much volatility that you see that big move to like 5 to 6 cents, like within a day or two. And that's going to be that move, right? Bitcoin's not going to be doing anything, or it's going to be going down. Hex gets news about pulse chain, whatever, and we move up 6, 7 cents, and we hold above that grind line for, like you said, 2, 3, 4, 5 weeks, something like that. And then it's just like a big move, because you're going to see volatile to the upside and volatile profit taking too, right? Initially, until a real trend can be formed. So yeah,
I'm basically looking for when we play with this line here in the
because before we didn't have news. That was just, can we actually break a cent? So I think it's going to be probably a shorter time period. I think it's going to be 2 to 3 weeks max. Yeah. Honestly, I think when it happens, it's going to be quick, because we have such a different situation now with pulse chain and just everything centered around that and what people are looking to do, and the copy and the stock split. There's so many things that go into this being a different situation compared to, oh my God, can Hex break a cent? And then when it does, it's just like free, you know what I mean? It's like smooth. It's what's the terminology here? Just like blue skies. There's no sell pressure. There's no trapped longs up there, right? And that's what it was for Hex. It was a new all-time high. We're not making new all-time highs now, but we are breaking out of a long-term bear or bull flag. So it's definitely different than last time, which is why I think it'll perform differently.
Oh, I'm just measuring like the breakouts. I want to just kind of see how long these took. But generally, it pops up a lot faster than people expect. Yep. So like you don't get that much time. It's down for a long time, but it gets up real quick. So this is kind of your time frame. You'll peak anywhere from May of 23, which, you know, that's probably a little bit optimistic, and January of 24. And this is just the one that gets us back to all-time highs. And so the way I anticipate this playing out is just like it did last time, where you're going to rip, and then you're going to go sideways up there at the all-time high. And that's where the masses are going to accumulate. It's above 56 cents.
That probably won't be Hex all-time highs, right? That's all-time highs against Bitcoin, because Bitcoin could be down to 15,000 and we're at 30 cents. like it's just the ratio between those two. So just because we get back up to the all-time high of the pull on that bull flag there doesn't mean that Hex is back at 50 cents exactly. To be frank, I don't know where that would be. It's gonna be tough to say.
This would be a 2x range up here. So anything up here would be a 2x range. Would there be 50 cents to $1, basically, if they're equivalent in valuations to
Okay.
what they were. So let's
So
if I go
assuming
to the
Bitcoin
dollar
doesn't
chart.
continue to go lower.
I mean, look how nasty this looks on the dollar chart right now. Like that is a strong weekly candle. Straight up.
How much time we got left on it? Got
5 hours.
Yeah, it's coming up.
5 hours, 22 minutes. So that closes. And like I said, you don't see that strong of a weekly candle very often. Maybe you could say.
And this is on low volume and no big buyers.
50%, 42%, 60% here. This had a wick. So this one closed down. It closed at only 38%. So yeah, I mean, this is one of the strongest rejections of downside pressure that we've had. This reminds me a lot of this period here, back at the big payday, basically. So if you're getting that kind of a move here, you can easily go back and test 10 cents. And then, yeah, if you reject back down, you're back at 2.6 cents. But then this is where the new accumulation starts because sentiment changes effectively.
Yep.
And again, a mass adoption comes after the green candle prints. It doesn't come before because people have to be shown the way, right? All it takes is a coordinated effort from buyers and a sentiment change of the market. And that's kind of like I've been saying all day. These buyers are outnumbering the sellers every single day.
That's adoption for you right there. That's a cycle. That's what defines a cycle.
And the best part is you can see it all on chain with this coin. Like it's not like all
it's
the
just
other
more
coins.
transparent here. So that shouldn't worry people. That's working as intended.
Yep. Okay. Quick last thing. I got a communist airdrop here. This was an airdrop given to Hex stakers. And so this is in a falling wedge now, but look at the range it's traded in. It's traded in like a 6x range from the wick low to the wick high. It's in like 6.5x range. So if you were trading this, you could have traded a 2 to 3x range for like a majority of this pattern. And now it's getting like very, very squeezed, but it keeps coming up and tapping the top side of this trend. This is the grind line again. Once it gets above, it'll just slowly start to grind its way out of here. And I think like there's upside available for this communist token, which is just a free airdrop that incentivizes you to stake for longer. It tries to incentivize good staking behavior. Yeah, it's just a coin that's got a lot of zeros and given to free to stakers and doesn't have any other utility except that you can buy it off market and sell it. But who knows if other things get built onto it in the future. But just the trading range itself is opportunity, or it has been for people. So the liquidity is up to $90,000 of USDC in the pool. So throwing like $1,000 in here and watching it turn to $2,000 or $3,000 and has been good for traders. So yeah, that is its own utility in and of itself, short term until something else gets built on it. So something to keep in mind. I wouldn't be opposed, the way it's been supported here for so long, you see the downside could be as low as like somewhere down in here, which would be like a freaking 70-80% decline. But the upside is like obviously multiples. So something to keep your eye on is communists. The dog coins have been getting wrecked, but they might be bottoming. Let's see here. Yeah, it looks like the dog coins are trying to pump off this low. So they got really oversold. Pulse Doge has just been getting hurt against Hex from bad, but it's trying to capture support here. ASIC, same thing, trying to round out. Pulse Bitcoin is the underlying for the ASIC token, so that creates bottom here. There could be upside here, but not my cup of tea. Just something to keep your eye on. And
I'll say this about that: this has been the perfect bear market, man.
Yeah.
It's been perfect. It's been absolutely perfect, man. People are gonna be looking back and be like, yeah, this all made sense.
Yeah, they should be. I mean,
And they're gonna be like, how in the hell did we not see this stuff sooner? Every time, man. Every time.
yeah, man. I'm just looking at. I look at a lot of coins, like, and this breakout. All these breakouts were so obvious to me. Phantom had a beautiful breakout. Monero had a beautiful breakout. Stablecoins breaking out. Solana tried to catch support. Tron's coming back up to test its all-time low level. Like, check this out. This is Tron. It broke long-term support going back to 2017. And now it's coming back up to grind and accumulate at the low. So this would be like one of those coins that if you thought Justin Sun wasn't going to let it go to zero, you'd buy it because it would go up on just, in the next bull. He's just trying to create. I wonder what this looks like against BTC. Look at that.
See, that doesn't look as good as Hex's.
No, it doesn't. It doesn't at
But
all.
it's doing a similar pattern.
But the point is that it supports our thesis that once Hex gets back above and grinds above, it'll start to break and go to higher levels, like this.
I think it really just captures what's going on more clearly and removes a lot of emotions.
100%. Yeah, dude, the Hex Bitcoin chart, by far the cleanest chart in crypto. Look how clean that chart is. Beautiful.
That's all Richard cares about. And I'm not gonna lie, guys, like, no offense to anybody who creates content in the community. I don't even care what Richard cares about. Like, that's it. Like, the day he lets the day that this chart turns to poop is the day I become worried about Hex. There you go. That's like, if I had one test, like one mandate for myself on being invested in this, that's it. That's it.
It takes away a lot of the stress, man. It really does.
That's it, man. If you're having problems, then you know it's for other external reasons. You don't have enough money in the bank account, so you're stressed. You need the price to go up because you're stressed, typically because you don't have enough money in the bank. Whatever, right? There's usually other reasons going on. Because if you only look at this, there's no problems. There's zero problems.
Oh, the other thing we didn't touch on, which this is super important. This is the stablecoin index. And when the stablecoin index falls, it usually means general strength in the overall crypto market. And so this was like a clean break, and we were all over this, dude, all over it, because we've been following the DXY. So in our private Discord. So check this shit out, man. Like, you get when stablecoin dominance falls, it means money is moving out of stablecoins and back into Bitcoin and Ethereum. That's what this means. That's why this break of this triangle is so important to see. So that you effectively, like, the downside on the stablecoins is like 18% even lower over maybe a 30 to 60 day time frame before it tries to catch some support. Which means that Bitcoin and ETH are not done running. Like, people want to try to say they are, but they're not.
Yeah.
And look, right as we speak, Bitcoin is going up to, it's trying to get to above 30K. This is your first resistance here at like 25K, basically. And your next level is like somewhere up here in like the 29, 30K region. But like, if you go back to the original breakdown, what is that, like 32K or something? That 30 to 34K region is like such a key zone that to me, there's like a freaking magnet there that they're just going to try to get it back up there before letting it detract for another fucking 9 months. Basically, we're getting it to there by May, and then the shit's going to dump the rest of the year, in my opinion, or it's going to be super volatile. And then you come back to these levels. So stable coins are dropping because money's flowing back into Ethereum and Bitcoin. And I wanted to show you guys this too, ETH versus Bitcoin chart. This is a cross. ETH has been gaining on Bitcoin for freaking ever, since 2019 August. It's just been going up against in Bitcoin valuation, but it's having such a hard time breaking this level. It's like, it feels almost like manipulation or like artificial, like, price action, that it's just, that the Bitcoiners still don't want to let Ethereum take over, to me. But eventually what's going to happen is when the real world comes into crypto, they're going to be buying Bitcoin, but they're going to be buying things that have utility that they can run stuff on top of. So if ETH is that thing right now, you know, whether it gets taken out by other EVMs or other opportunities is left to be known. But this is a key level. Like if it breaks below this level, that's a buy on Ethereum. That just means that Bitcoin ran harder for a shorter time frame. But I still see this in such a mega uptrend for so long and in this ascending triangle or ascending wedge. ETH is going to decouple away from Bitcoin at some point in the future. And the flippening will be real. And when that happens, all gloves are off. The entire narrative in crypto breaks down and changes. And that's going to be really price positive for things like Ethereum and Hex and others. So this is something to keep your eye on as well. So USDC breaking down. Overall markets rallying. Hex decorrelating. What else? Fed rates are probably coming up to slow down and then pause. And the dollar itself is just can't find support. The dollar index, it's still got more downside to go. I got it set for another 8% down, whether that's immediately or over the next few months. Even if you try to find support here and then you rally up into May or whatever, then you drop out and this becomes a deflationary environment. It's all setting up to be bad for the dollar, bad for the Fed, but good for sovereign crypto, good for precious metals. Gold has had this crazy rip off a clean triple bottom. And when you look at gold on like a daily chart, it created a similar pattern with this like wick lows on, like if gold is a store of value and it did a triple bottom around the 4 hour, I think it did even more than that. Yeah, it was like it's pretty clean triple bottom on gold and on the 4 hour. If gold is a store of value and Hex is also trying to be a store of value, it also did a clean triple bottom or quadruple bottom. And so like it just, the dollar's out of favor and strong sovereign assets are where people are going with their money now. And so to me, the bottoms are in. Things are looking good for the markets. And I'm just trying to look at the comments here, see what we got. X is never going above 3.5 cents anymore. Okay. It's funny. Ozzy's like the biggest troll on Twitter. This guy who says, I agree, you should go buy Zen, trust me. I'm actually not, so I'm kind of like, I'm not like against Zen. I actually track the chart and like I see where the burn is going to come in and it's going to be price positive long term. Like right now you got 126 buys, 98 sells. You got, Jack Levin trying to create a layer 1 protocol, which will be basically cross chain, like an underlying layer that talks to all of the different chains. So like if you look at all these chains that Zen has been launched on. And now he's created X1, which right now is running at 1 second blocks. Now, whether that holds up for the entirety of the whole, like if that holds up for the full mainnet launch, that's going to be insane. That you have you can go onto the compute layer, which would be X1, to run your EVM code and then bring it back onto your native chain like Ethereum or Pulse chain or something. So it'll be like the interoperable chain. And you're going to need Zen in order to burn, in order to get X1, which there's only going to be 1 billion of. And so all this is lining up to be price positive for Zen long term. So for example, let's see here. This is kind of what the plan is for X1, is to create 1 billion of them and 500 million of the tokens, so half, have quarterly burns. So every quarter, X1 tokens are burned, half of them, like a percentage of them gets burned every quarter, and there's only ever going to be 1 billion, so it's completely deflationary. And the only way to get it is to burn Zen on the other networks to get it, which means you're going to need more Zen over time to get more of a deflating supply of X1. And then that gets burned out of the supply forever. And then you got the Zen FTs burning Zen. And then you have 50 million of the tokens are going to venture capitalists, which are going to provide the liquidity, the USDC backing, or the liquidity on X1, so that we'll have liquidity from the jump, and that those are time locked for 3 to 4 years, so they won't be able to dump for 3 to 4 years. And then 200 million of the tokens gets locked in a foundation treasury. So in the event of like they need to use that funds to like make the X1 economy grow, they can use them for that reason. Or like in the case of Ethereum, when Ethereum got up to 5 grand, ETH was basically unusable, and so they had to dump the price of Ethereum to scare everyone away and get the chain back to usable levels again, so that GUI would come down, so people could actually use Ethereum for what it was meant to be used for, instead of just being some speculative run up forever asset that breaks the chain effectively. So that this is important for them to have this as some sort of a foundation. And then again, like all of these deflationary tokens are getting burned quarterly, and it takes the burning of Zen to get them. So it's all going to be price positive for Zen long term. And this could be your underlying layer 1 or layer 0 like compute chain that you run all your code on at 1 second block times, and then you compute, and then you use an oracle to pull that data back onto like your Pulse chain or your Ethereum. So there's way more going on the tech side, that if everything plays out the way that I think it could, that this thing would actually be set to rally for much, much higher prices. And the fact that you can mint it for like $3 or $4 is actually something that people could afford. Now, the problem that you're running into right now is the coin supply. It's costing more and more USD to mint. So those guys that mints are coming out, it actually makes more sense for them to go buy off market than it does to mint a 100-day mint, because it's cheaper to just go buy the coins off market than it is to mint in some cases. So what happens is, as Ethereum gets more expensive and the GUI goes up in price, the supply starts to decrease. And you can see here that even though you're seeing like a spike today in minting because gas fees might be down, let's see, there's at 22, so that's not actually that good, but it keeps reverting back down. Like, yeah, you're getting these spikes in minting, but they're generally, the trend is up, but it's still having a hard time. And over time, the red line is burned Zen, and the yellow line is staked Zen. There's more being burned than staked, and there's more being penalized because people aren't ending their stakes within the 7-day grace period. So those are getting burnt out of the supply forever. And if you look at the estimated future supply on Zen, it is also deflationary until year 8, where it goes to basically 0. Like the inflation drops off a cliff. So the long-term, like 10-year play on Zen is that it's going to increase crazy in price because of all of the burning mechanisms being built around it, and then that layer 1 chain in X1 being a huge supply sink for the token. So just kind of my hot take on the token. I mean, it's another option for people, and then you're minting this stuff for almost nothing now, or you're buying small bags of it, and then you can always bring that money back into Hex to create, Hex is the store of value. That's where you want to store your economic wealth. So something to think about that way.
I don't think I got anything else on my end.
Yeah, I mean, we've touched on everything. Like, we've literally went through, just going back through here and checking charts here. Hex is trading above the 500-day resistance as we speak. So bottoms in, boys and girls, bottoms in. We're decorrelating as well. So just be head on a swivel. Be prepared for 9 months of extreme volatility. And watch the Hex BTC chart, as it's going to show you the way.
Yep, that's the move.
All right, y'all. Well, thanks, Ryan, for joining me today. I appreciate you so
man.
much for doing this.
Appreciate
I learned
you,
a
man.
lot, and we got to sign off. We'll pull up the Hex rainbow chart. Bottoms in. Let's go. Cheers, guys.
See you guys.